Hello traders, this is Heather and I had another great day using the Quant Pivots to day trade SPX options. Let me show you how. So right here I have the daily chart of SPX and I'm going to zoom in just so that you can see today's candle a little bit better. So we ended up closing with right where we opened. So even though we made a big move higher, we ended up coming right back down. So if you look right here, this is the daily H1, H stands for high, on the Quant Pivots. And today that level was set at 63.29. Now, if we look at the statistics of the daily periods, what we can see is that price only touches the H1 28.9% of the time, and it only actually closes above the H1 18% of the time. So what does that mean? That means that today there was a 82% chance that price would close below 63.2950. So how do you take advantage of that? Well, when price comes up to or even above that level, what you can do is sell credit. In this case, you would sell a call credit spread, and that's what I did. You could also buy a put debit spread. You could also just buy puts. What I don't like about that, though, is that if price hangs out up in this area for too long, you could end up with a lot of premium decay and not actually making anything. So I personally love the way that a call credit spread plays in this scenario. So once price came up here, and I'm actually going to move to a 5-minute chart so that we could kind of zoom in and see what price did throughout the day. But once price came up above this level, I was looking to sell the 63.30 calls, and what I wanted, I was just doing a 5-wide, so I bought the 63.35 calls as well, just to lower my risk. I wanted to receive a $3 credit for that, which would have made my total capital risk $200. Unfortunately, that would have required just a little bit higher of a push in price in order for me to get that. So I didn't quite get there, but once I saw that red arrow, that sell arrow print, that was my signal that price was going to be coming down. So I settled for a 265 credit. That made my total risk 235. So already right there, my risk was lower than my potential reward, assuming that I let it cash settle. So I was perfectly happy with that. Now price did, after I entered the call credit spread, price did come back below that quant pivot, and then it came back up. It really made me work for it today or hold out all day long. But look at what happened right around 11:45 Pacific time. That's when we finally started getting that flush in the last hour of the day. So because price closed below 63.30, that meant that I was able to hold on to that entire credit that I received of $265. And you know what? This trade continues to work very consistently. It's an easy trade. You don't have to manage a whole lot. Of course, you can take it off sooner if you want to. You don't have to let it cash settle the way that I did. But with this big flush, I was pretty sure that I was going to be able to keep that entire credit. And again, going back to the statistics of the Quant Pivots, the fact that it only closes above the daily H1 18% of the time, that's a pretty good bet. So I was perfectly willing to let it cash settle. Of course, it's up to you how you manage the trade, but this is how I tend to use the Quant Pivots and how I played it today. So if you're interested in adding the Quant Pivots to your chart setups. I'm going to link to the sales page below in the caption. Make sure to like and follow. I'll continue adding these videos where I show you how I'm using the Quant Pivots as well as my other indicators and my chart setups and my trades. So make sure to like and follow, and I will see you in the next video. Thank you so much and have a great day.